Hello, and thank you for joining us for this World Council of Credit Unions virtual event, A Global Outlook, Credit Union Regulations in 2024. My name is Greg Newman, Director of Communications for World Council. Before we get started, please take a moment to click the interpretation button at the bottom of your screen and choose the language of your choice, English or Spanish, to make sure you can hear all of today's presentation in your preferred language. Tómese un momento para hacer clic en interpretación y elija su idioma, inglés o español, para asegurarse de que puede escuchar esta reunión en su idioma preferido. International standard-setting bodies were active throughout 2023. They laid the groundwork for national-level regulators to begin reviewing and changing some of the regulations and standards that were in key operational areas impacting credit unions. By understanding the changes made and new guidance issued by international standard setters, you'll have a much better idea of how to plan for the regulatory issues impacting your credit union this year. Today, Andy Price, World Council's Senior Vice President of International Advocacy and General Counsel, and Erin O'Hern, World Council's International Advocacy and Regulatory Counsel, will discuss the regulatory issues surrounding digitization and financial inclusion, climate change and sustainable finance, cybersecurity and operational resilience, payments, as well as anti-money laundering. So let's bring in our experts now, Andy Price and Erin O'Hern from World Council's International Advocacy team. And Andy and Erin, before we dive into some specific areas of regulation, we may have some attendees who are somewhat new to the regulatory field. So Andy, if you could give us a quick overview and background on who are the key international standard setters and why their guidance is important for credit unions in different countries.
Yeah, thank you. Good morning, good afternoon, good evening, wherever you may be around the world. It's a pleasure to be here with you today. So a lot of the work that the World Council does is at the international standard setting level, and those are organizations where countries come together to establish all kinds of rules in the banking industry mainly, and they are international standards. A lot of the finance ministers and central banks participate in these agencies and help to develop the rules that they then take to the national level and then adopt them. While those standards are not mandatory, every country can deviate it as it seems fit. Those standards get a tremendous amount of weight, and because a lot of the countries have participated in the development of them, they tend to follow those rules. Our role at World Council is to make sure that credit unions and our credit union cooperative model are represented at that level, that when they're setting these standards that are largely designed for large internationally active banks, that credit unions get included in the consideration of those regulations. The issue that you will hear us refer to a lot is the issue of proportionality, and that means tailoring those regulations that can support the credit union cooperative model. And to give you an example, a lot of the agencies that we deal with, the most common is the Basel Committee on Banking. They're housed in the Bank for International Settlements that sets capital standards for the industry. The Financial Action Task Force sets standards for anti-money laundering. The IASB, IFRS, International Accounting Standards Board sets a lot of the regulations. Everybody's complying with CECL and IFRS 9 that comes out of the accounting board that we standard. There are many other. The Financial Stability Board focuses on systemically important issues out there. They deal a lot with cybersecurity and those type of issues that are coming out. The fallout from Credit Suisse and Silicon Valley Bank that happened there. They are looking at reforms in those areas that are systemic issues as well. So to top it off, by the way, we also work at the G20 level, and the reason we do that is because the G20 gives direction to these international standards. Those are agreements among countries on issues that they want to focus on, and the issues that they decide on at their annual meeting in the G20 comes out in the leader's direction, often directs the work that the international standards focus on, and so that's how it works. A lot of the work we do then comes taking those standards down to the national level, where implementation of those standards is often a big challenge for credit unions. That's a 20,000-foot view of how it kind of works out there.
Well, recently you released the 2024 Global Regulatory Update. In the report, You wrote 2024 will be a year of digital innovation while striving for financial inclusion. Erin, can you explain the connection between digital innovation, regulations, and financial inclusion?
Sure. Yeah. Thanks, Greg. And I'll echo Andy's welcome and hello, and thank everyone for joining us to talk about regulations for the next hour. So we're excited that you've all decided to join and listen. And of course, please feel free to put in questions and follow up with us afterwards. So we'll have our contact information and some additional resources to share at the end. But thanks for the question and mentioning the report. I hope folks have had a chance to take a look at that. As we looked at the activity of what was going on in 2023, you really couldn't help but notice that so many, nearly all of the regulatory developments, and there were a lot, it was a highly active 2023 for the international standard setters. You couldn't help but notice that so many of those really dealt with digital innovation, with looking at innovation broadly, looking at updating technology, looking at how technology can support financial services and really disrupt and change the market. And so when you think about that from a credit union perspective, we have the unique lens, which I'm so appreciative to work for credit unions because of this, where you are looking at what's the point of all of this? What's the purpose of looking at innovation, changing things up, being able to do things faster, being able to do things more efficiently, being able to reach people more broadly. It's really about financial inclusion or reaching your local community, serving underserved communities, fulfilling that mission of credit unions to benefit the financial lives and well-being of those in their community. And so when we look at digital innovation and the regulations, we're looking at it from a slightly different lens than other players within the financial sector. And I'd say anytime there's a big swing or a big change or a big disruption, you're going to see regulations coming along with that. And that's really the moment where it's so important to pay attention to those changes and the advocacy work kind of globally and locally in individual countries, because you don't want those changes to negatively impact a credit union's ability to not only continue to serve as they are today, but be able to push forward into the future and really continue to reach and achieve that financial inclusion mission. So we're really hyper-focused on that particular change this year, especially just knowing all those developments are coming and that unique lens that credit union look at them through.
Yeah, you mentioned that in real terms for credit unions, it does sound like there are concerns that could stifle digitization or digitalization efforts in some countries.
Yeah, I think that's a real concern. Advocacy looks at both the technical regulations, but also sometimes you got to step back and take a look at the bigger picture too. So there are a lot of different factors that can go into this. You'll see a variety amongst different countries. They may react differently, but regulations are not in a vacuum. They do have political influence. They do have policy influence. They're also affected by market changes, by the economy. Andy mentioned at the beginning, there were some banking challenges earlier last year and the year before, and that certainly impacts the regulatory mindset of international standard setters and individual governments and policymakers. So there is a concern as you think about historically when big disruptions have happened, there's been a pendulum that swings back and forth of we want a lot of regulation or we want very little regulation. And I really, really feel for the compliance folks at credit unions trying to implement and adopt these regulations, because it's not a simple thing, both for the compliance folks on the ground, but also for the regulators trying to write these regulations. A lot of that international standard setters, and I know Andy and I are now both mentioning proportionality so early in the first 10 minutes of this discussion, but it really is so critical because as you're thinking about these new regulations, they are being written for the largest international banks, for those doing cross-border transactions all the time. They're not always written or often written for credit unions focused on their particular financial well-being mission. And so as you look at some of those efforts in regulation during times of disruption, it can either leave it too open so that potentially bad actors could come in, take advantage, manipulate, especially vulnerable populations, or it can swing the other way and be so complicated and so resource intensive that it pushes folks like credit unions who are focused on their local communities out of the discussion. So that's another reason we're keeping a close eye on this. We certainly don't want that to happen in this case, knowing how important digital innovation can be for the credit union industry.
Erin mentioned that they want to take your questions. If you do have questions for Erin and Andy as you're listening today, use the Q&A button at the bottom of your screen and type them in there, and we'll be asking those. I'll be asking those later as time allows. Let's get to some specific regulatory developments. Payments are very closely tied to digitalization these days. Andy, can you speak about what that means for both faster payments and also broader access to payment systems?
Yeah, the area of payments is an area that's getting a tremendous amount of focus from the international standard setters. And it starts again with the G20. In their leaders' declaration, they have set out a mandate for faster, cheaper, more transparent, more inclusive payments. And they've even set targets for that and asked the international standards setters to move towards a payment system that accomplishes those goals. And so they're doing a lot of work. The Basel Committee on Banking Supervision is even running proof of concepts in multiple parts of the world. They recently got finished with ones. I think it was cross-border between the EU, Thailand, Philippines, Singapore, where they were trying to show proof of concept of the ability to have faster, cheaper, more transparent, more inclusive payments. The SWIFT networks of the world, the Visa, MasterCards of the world, they're all trying to get their market share in there. I mean, the difficulty of payments going cross border with exchange rates and how that works is an issue that they are trying to solve. The use of central bank digital currencies is being piloted and explored in those worlds, and how that will work, and then all of the challenges that go along with that. Standardization of information that gets traded, what information is going to be in there for purposes of anti-money laundering requirements. All of these kind of technical things have to be worked out and figured out before you can kind of come up with a global system that accomplishes that. The EU is doing a tremendous amount in this area, including a proposal on there to mandate instant payments among those entities that are within the ambit of the European Union. A digital euro is being contemplated in that area that perhaps could help with some of the payment systems. It is a hugely transformative process that's going on. And I think the next 3 to 5 years is going to be telling about where we go in the area of payments.
Yeah, you mentioned the central banks and the digital currencies. It seems like there are a lot of efforts in different places for national digital currencies, kind of a new frontier when it comes to payments. Is there anything specific on the horizon there, Erin, you want to highlight?
Yeah, I think Andy points out kind of a gray area as a quick example of one of those kind of concrete examples of digital innovation that we're watching because of the impact it can have on kind of day-to-day financial transactions. But it's certainly, countries are at different stages, as Andy mentioned. So this will be kind of more immediately important to some countries than others. But, I would point out too that the Bank for International Settlements, so BIS, they did a survey a few years ago and said that 86% of central banks across the world are actively researching the potential for a central bank digital currency. So even though some are closer than others, the Caribbean was out of the gates first. In a lot of this area. And as Andy mentioned, the digital euro, this is really something that they're looking at globally. So even if it's not kind of in your front and center right now, it's certainly headed that way. He mentioned that the digital euro has been proposed, and they recently, kind of the end of last year, that fourth quarter, completed its 2-year investigation process and has moved into this preparation phase. So they're looking for potential partners to really develop that platform and infrastructure, and they're looking to write the rule book on how some of this works too. And again, this is kind of approved at each stage within their Central Governance Council. So each time it's approved and moved into the next phase, you get the sense it's headed in the direction they want it to if they're continuing to move it forward. So as you see more of this happening, I think it's important to then take it back to what we spoke about at the beginning. So what, again, is the purpose of digital currency or looking at this type of digital innovation? And again, that's financial inclusion. You know, when they put out that survey for the central banks, one of the top reasons folks mentioned was financial inclusion and to strengthen access to certain payment mechanisms. But so much of this can depend on the regulations. You know, Andy mentioned even privacy standards, what fees are going to be associated with that, what sources of providers are going to be available for folks, and, you know, how are credit unions in this conversation, knowing they're currently kind of the most capable of reaching underserved communities. So even if this isn't something that's necessarily impacting you today, we're keeping a close eye on it for the future, knowing that this can really have a large impact on financial inclusion. So just one example, as we continue to look at digital innovation in different facets, it can kind of hit us in lots of different directions. And when you see something like that, where so many of the central banks, even the Federal Reserve within the United States, recently released a consultation paper on this. So many different countries are asking for feedback from public stakeholders, whether it's folks within the industry, whether it's the public community at large. So it is something that we're looking at closely. And I think another example of what this process of digital innovation can look like in different instances, where you're seeing central banks, for example, putting out proposals, asking for feedback, and then starting to write proposed rule books around some of this, and certainly a lot of testing happening. So we're watching a lot of the test cases. Like we said, there's a lot of different countries at different stages. And so looking at where those test cases are leading us and what learnings can we take from them into other countries.
Yeah.
One of the other, oh, go ahead, Andy.
I was going to say the European Union and their consideration of the digital euro was a fascinating effort to watch, because at one point the proposal was to go totally cashless and mandate the digital euro. And half the country came out in opposition to that, including taxi driver, service workers, all kinds of groups who really did not want to get rid of the use of cash. And that I think, there were many reasons, but it was a large part why the European Union said, okay, we need to step back and consider whether we're willing to take that step and go entirely digital for purposes of payments. And I think that likely kicked that issue down the road, at least for the EU. But it's fascinating to see the permutation as these transformative changes come down, how it is going to work for all of us.
It's a great comment too, because not only are some of the benefits not always immediately available or clear during innovation, but sometimes some of the unintended consequences are also not always immediately clear. And I think that's really kind of what we're hypersensitive to during some of this innovation period.
Another of the top areas of discussion among credit unions today is climate change. We talk about it a lot at World Council. Andy, as you look at the upcoming year, how will regulations impact those discussions? What regulatory changes are happening related to climate change and climate finance?
Yeah, I would say the regulatory changes are now upon us. They are here. A lot of this stems back to the United Nations directive on addressing climate change, the Paris Climate Accords. All of those are international agreements where countries have really agreed to, beyond the financial sector, transform their societies so that we all operate in a way that helps to prevent climate change. And now that is playing out in the financial sector. And it is, I will tell you this, it is from top to bottom in a credit union, with a lot of challenges sitting there in front of us, and also a lot of opportunities sitting there in front of us with respect to the change. The International Accounting Standards Board set up an entire new agency just to develop the sustainable disclosures for essentially what are publicly traded corporations. There's an S1 and S2. One is on your disclosures that you have to do. The other on climate risk. Those have now been adopted, and they're really in the process of going around the world. We've seen various countries that have adopted forms of this for publicly traded corporations. Brazil, the EU has, Canada has to an extent. Those are now being adopted, and you are now seeing the financial regulators, including the international standard setters, having come out with a lot of guidance for how this is going to look. In the financial sector, Basel Committee has their high-level principles on managing climate risk, and it affects everything from your operations to your investments, to the products and services you have. You know, how if you have a green loan or a green mortgage, how are you going to articulate how that really affects climate change, and how is a credit union going to get the science to be able to show that when it wants to market something that way, and then further to disclose that to your regulator. All of these things are really being ferreted through. The disclosures that you have to do, the regulatory reporting, all of that is, so it's from top to bottom on a credit union. All of these are going to be regulatory burden for our industry, but it's not only us, it's everyone in the world who's going to have to measure with these things. The wonderful thing for credit unions is there's a lot of opportunities for us. Number one, the financing that we can provide to help finance activities that are transforming our societies into more sustainable, more ecologically friendly type of activities is a role we see our credit unions all over the world engaging in that activity and wanting to do that. The bigger opportunity, I think, though, really comes with our credit union cooperative model. We're community-based financial institutions, member-owned. We don't pay shareholders. Our funds go back into, and the social benefits that we provide, which is now a lot of our countries around the world are documenting that, the benefits of that. That is getting included in this conversation of the roles that community-based financial institutions can provide and improving the circumstances of their communities. We have lots of countries that are documenting the social benefits. The EU is considering developing a social taxonomy, is under consideration there to consider just the benefits of that. So it's a lot of regulatory burden that's coming our way, and figuring out how we can make that work for credit unions is the challenge. And then the second part is articulating the benefits of our credit union cooperative model. One last thing that I'm going to tell you, the ISSB regulations, the important thing that is in there that we got built in, and it was reinforced by the G20 this year, is the concept of proportionality and making those regulations work for credit unions. Language in there that says that credit unions, can use the data within their own credit union to document why they think something is meeting their sustainable. So you don't have to go out and pay for expensive consultations and reports and science to document what you do. A lot of that is going to help to reduce the regulatory burden, but also allow you to disclose the wonderful work that you do already. So a lot there on sustainable finance. It's big.
And a little more on this, through our Climate Influencers Network, World Council is pushing for credit unions to focus more on climate resilience. And realistically, it does seem inevitable. We're only going to see more sustainable finance tools out there. So, Erin, how do you make sure that as they get a fair shake from their regulators when they're trying to implement those?
Yeah, thanks, Greg. It's a great question. And this is certainly an area, you're right to say, this has been kind of the talk of the town in terms of regulatory topics, operational topics, lending topics, opportunity, what the future looks like. And I think as Andy mentioned too, it's really important to note that while we've been really focused lately on international standard setters and looking at making sure there's proportional language, and especially in this area, such a huge win. I mean, congratulations to Andy and the advocacy team last year that really made sure that that language was in there and front and center. And now as you look ahead, so you had the big win, you got that in the international standards. So then the next phase is, as Andy mentioned earlier, what does that mean for national level implementation? Now there is something in there that individual countries can look at to say, okay, there is wiggle room, there is flexibility within this international standard for us to say, okay, we need to look at our local communities, what our local financial institutions need, and tailor those regulations appropriately so that they're not overly burdensome. And those that are best apt to be able to serve those needs to address climate change, to meet those financial needs, are not overly burdened with those regulations. So it's sort of a two-pronged approach here where you start at the international level, make sure that flexibility is available, that then as national level governments and policymakers start to look at that. That's why it is so important for credit unions and for the national trade associations to really work together to stay on top of some of these developments as those policymakers are making changes at the national level. I don't know that I can stress that enough to say, as these regulations kind of move from the broadest global standard to then look at what's going on the ground within your country, to make sure that that flexibility is highlighted, that they know there is support for having that properly tailored, that adjusted regulation that's not just set for international banks and those of the largest financial community, that they're able to do some of that. And so that's certainly our focus here going forward, is supporting those efforts kind of at the national level as we move forward. But I also think, just because this is such an important topic, to really kind of pause on this one too, where I think regulation sometimes can seem, especially advocacy at an international level, can seem a little bit less tangible. Like, how does this apply to me? And this is a little bit of a confusing area, because you're hearing about both regulatory burden and opportunity ahead. So really, there's a couple different facets, and maybe just to take a second to kind of break that down for folks. Really, you mentioned the Climate Influencers Network, and that's been such a great opportunity. One of the things credit unions do so well is collaborate, is share their best practices so that they can take them back to their home community and really implement those. That's something that I've always felt we've had a leg up on the large banks, that we're so willing to work together to kind of further this mission globally. And that is one of those areas. Climate change is going to be one of those areas that I think we all need to pull together to find those networks, to find those best practices. So you will have the lending side, the financial service side. How are we helping our community achieve their progress and work towards fighting climate change? And then you'll also have the other side that Andy mentioned of, okay, now policymakers are requiring us to disclose some of these things, our impact on the community, both through our financial services that we're providing, and both just as an organization operating. What's our climate footprint? So all of those things could potentially be coming our way as it applies to credit unions. So maybe one practical, to kind of take it out of the highest level and make it practical for folks. And you really mentioned kind of there are folks looking at how they document this now. I think that's something you can take back today to say, even though there's a lot of conversations about complicated methodologies and how are we calculating some of these things, there is always a place to start to think about, how do we document the information we have available to us now? So especially as credit unions are looking forward to the future of making some changes or improving some things, let's document our baseline. What sort of lending are we doing today on the financial services side? What impact does that have? What are we doing today? I know a lot of credit unions have formed just small committees informally to take a look at internal practices. Maybe they've reduced their paper usage, or even small things like that, or looked at solar panels, not only for lending, but for their own branches. Those are all things that are nice to have baseline data just in your own in-house. So think about, are there ways we can document current usage, current activity right now? And then are there things like the Climate Influencers Network that we could join to really learn about best practices? What are others doing? In some countries are further ahead, some credit unions are further ahead than others, but this is an opportunity to kind of find those networks. We're not only seeing them at the global level, but also at the national level, of folks coming together to say, what can we do today? So it can seem quite overwhelming, I think, at times, but maybe starting small too, thinking, how do we document what's currently going on at our credit union? And then how do we join a network to continue to learn more about this going forward?
And if anybody has not heard of the Climate Influencers Network and you want to know more about it, I just dropped a link to it in the chat, so you can check that out now or later today and learn more about Climate Influencers Network and how you can join, or your credit union can join. Let's talk cybersecurity and operational resilience. Andy, could you provide some context first to operational resilience and how it relates to cybersecurity? Because I know IT professionals stay up at night thinking about the threat of a ransomware attack or other cyber incidents. So what are you paying attention to this year in those areas?
Cybersecurity is on top of the mind of every regulator, including the international standard setters. operational resilience is really a big encompassing word that it tries to encapsulate any adverse incident that might happen to your financial institution, and how are you going to get prepared for that? And it's anything from preparing from a robbery that might occur, or preparing for a tornado or an earthquake, a hurricane that might come through. But a lot of the work that's being done is really focused around cybersecurity, which the attacks are becoming way more sophisticated. A lot of them are sometimes backed by government sponsors who are doing this to try and steal trade secrets or do something nefarious to another country. And so the issue of how do we prepare for that as an industry, being that it's really a global issue at this point. So the Financial Stability Board, one of your I guess one of your top tier international standard setters looking at systemic issues, has really been focused on this. Last year, they worked on what we call the incident reporting standards, and that's when do you need to report an incident? How are you going to report it? And it's everything is granular as to the format of your date. Some countries, if you say 1/12/2024, in some places that might mean December 1st as opposed to January 12th. So all of those things being worked out. There's a document is called FIRE, FIRE. It's the format for incident reporting that has now been developed, that is putting it out there. The idea is to do, if there's a cyber attack, to report it quickly so that there's not a contagion, so that spreads to other places, and other institutions can prepare accordingly. Do whatever updates you're getting beyond my technical expertise on what you have to do. But the standardization of that reporting that is designed to help quell some of the cyber attacks that are going on out there as well. The second component that they've put out is the management of really what I call third-party vendors. If you're using an outside tech firm, or using a Microsoft, or using a Amazon services, or whatever it may be, how are you going to vet those? What's your responsibility? What is your role in the data that you exchange in there? And that designed to help reduce the risk of a cyber vulnerability. Those are all guidances. They put out a toolkit on this, by the way, which I actually think is quite useful for credit unions. And yes, proportionality is embedded in that, but it's designed to give financial institutions different ways they can approach to managing certain relationships and things that you need to think about and consider. That is now out there, that's come out from the Financial Stability Board. And cybersecurity is it's on the top of every regulator's list as far as risk to the financial institution from an incident that might happen. But those are some of the biggest developments. I would urge you to go and take a look at those things. The incident reporting is now being taken out to the national level for implementation. So don't be surprised if your regulator comes with you with some version of that they want you to adopt as far as your procedure.
If we had an over/under on the use of proportionality, that word, I'd put it at about 12. I'm not sure where we're at right now, but you're going to hear it again, I think.
If I could make a comment on that, because I think it's actually really important to drive this home. For the most part, there are some exceptions to this. I'm not saying absolute, but proportionality is really built into just about every single international standard. And there are a lot of things that are out there that give national level regulators the ability to tailor the regulations for credit unions. The Financial Action Task Force have actually done a wonderful job. There's a document out there on financial inclusion. There's language in there that says that their regulation should never get in the way of being able to provide financial services to somebody who needs it. And they give a lot of examples of ways that the regulatory burden can be reduced. Their digital identity guidance also contains ways that in a digital setting, you can reduce the regulatory burden. A lot of places require you to have 2 IDs, and we serve populations that don't have 2 IDs, or sometimes even no ID. There are methods and ways that you can do that, still be compliant with your AML requirements, but be able to serve that member. For credit unions, that's remarkably important because we tend to serve underserved and marginalized communities, and being able to provide financial services there. There are ways that you can de-risk populations and just go ahead and serve them, so long as you know that you have the risk is mitigated, and that population isn't likely to be doing something nefarious with their activities, you can serve them without having to do a lot of the requirements. The challenge is getting the regulators to acknowledge those and allowing you to implement those. So.
And just a reminder, we're going to be coming up here on a period where we will ask Andy and Erin some questions from our audience here. If you do have questions on any of these topics you're hearing, use the Q&A button at the bottom of your screen and type them in there. Let's end here with some discussion of anti-money laundering and combating the financing of terrorism, or AML-CFT, as you advocacy people like to call it. Erin, even here, digital innovation plays a big role with things like digital identification, doesn't it?
Yeah, Andy just mentioned the report, which is, I think, an important one to highlight from FATF that came out just a couple of years ago that talked about how you might be able to use a digital ID and just guidance around that. I think it's important to note too, as we're talking about digital innovation and where some of the regulators stand on some of this, the report is interesting where it says it's essentially technology neutral. They don't see it necessarily as a positive or a negative. It's just another facet that you're going to be dealing with, and they're going to provide some guidance on how you deal with that. So I think there's been some hesitancy in the past, as Andy mentioned, maybe some restrictions within either national level governments or the perception that this is something we can't take advantage of certain flexibility that's provided to us. And so this is a great report as just an example to highlight that, to be able to go through, it lays out different standards. It talks about credit unions looking at whether it's appropriately reliable, whether that digital ID is appropriately reliable, made independently. They've considered the potential risks. It lays out different assessment evaluations for you to be able to say, are the digital IDs we're going to accept, or the ones that we're going to see from our community, are those ones we're able to potentially screen competently by using this particular guidance. So it is really helpful, as we look, just to kind of tie it all back to financial inclusion. Again, I think a lot of folks could make an argument that maybe some of the capital standard regulations are the most important, but when it comes to financial inclusion, I would argue that anti-money laundering, the standards we're seeing and the guidance we're seeing from FATF, then filtering down to national level agencies that are charged with preventing terrorist financing and money laundering, are really kind of a key regulatory area to build a strong foundation, because there may be more flexibility in there than you realize. As long as you have that risk-based, really strong compliance foundation, there may be avenues that you haven't explored yet from a compliance perspective to be able to, again, open that account for someone or to be able to reach a new member. So I think there's another great example of a tie into financial inclusion and really parsing the regulations, not only when they're being written, but also then as you're implementing them, to make sure you're, of course, being compliant and making the risk evaluations that you need to meet your regulatory standards, but also looking for ways of, because we're honestly one of the few out there doing it, to make sure that we can reach the underserved community, those that may not be able to hit the highest regulatory burden without a financial institution putting in some extra effort to say, where can we build strong safeguards so that we can broaden access for everyone? And digital IDs is another. You think about what's going on in the world, there's certainly large refugee populations at the moment, large immigrant communities that are in need of service, and certain things like this are still ways to make sure you're safeguarding against money laundering, but also providing access at the same time. And that's really kind of the backbone to the regulations, to make sure that we're complying, but creating that access to financial inclusion. And Andy,
those are great points.
And real quick, I know we've had a few conversations on de-risking, and so I don't know if there's anything additional to add in there. It does, there are a couple of things that really kind of stay at the top of my list around concerning issues, and so I don't know if there's anything else you want to add, on that front here before we wrap up, just to make sure that we've covered kind of some of those highlights.
You're muted.
Boy, how long have we been doing this now, and I still forget to hit the unmute button? No, I thought you covered it quite well. What I would urge people to do is to go read that guidance on financial inclusion, because there are really some concrete examples that you see in international standards that are saying this is a way that you can do it. And remember, those are the international, although they're not mandatory for your country, they are worked on by the finance ministers and the central banks from your country. They will look to those as being the standard and want to adopt them. And oftentimes it's just pointing out to them that that is in there, that the international community has agreed this is a way that you can approach it, is often the best thing that you can do. It requires your regulator to do some work, to put some effort into it, and they don't like to do that a lot of times. What you need to tell them, though, is that they will be immensely popular among the population when people in their community are now getting access to financial services that are really needed for them, and being able to contribute to the economies. When they understand the policy consequences of that, a lot of them will come around and be willing to do the work on that.
Yeah, thanks for adding that, because I do worry that there are large groups out there that are kind of loosely categorized together, that whether it's through correspondent banking or, large banks are saying this group is too risky for us to provide services to because it's too hard for us to meet compliance regulations, or it's too burdensome, or we'd have to spend, too much money to do too many resources. So I do worry about kind of, and FATF, as you said, has come out and said, you should not just categorize one loose group altogether and say the whole group is too risky to serve. There's way more nuance buried in there. And so just concerned about that trend that large groups are being excluded just from loose characteristics that can be addressed through regulations.
The issue of correspondent banking is a significant one. The number of correspondent banks has been declining for the past 20 years at a steady rate. It's like 5 to 10%. They put out a report on this every year, and the number continues to go down. We have already, the Fed Reserve just came out with a report on correspondent banking de-risking. There is some more work. There's a lot of work being done at the international standard. I think we're going to see some more movement in this area. For credit unions, it's access to liquidity, it's access to payment system in a way that can be affordable to you. Banks often don't want to do it because they view the credit union, they're not familiar with credit unions. They may view you as a risk, and you may not be bringing them the volume of business that makes it worth their while to put some work, and so they just don't want to provide the services. But it's a true systemic issue that is really hampering our credit unions' ability to serve their members and provide services like the big banks are able to do. It's an issue that is it's one I've been working on quite a bit, and I hope over the next couple of years we're going to see some actual changes that come in to help ameliorate the problem. It's on everybody's, at least the international standards list of things to be concerned about. So
we've covered a lot of ground here. For the compliance professionals who are listening, is there anything that you forgot to mention, or are there other items that you want them to take away today? Andy, let's start with you.
Yeah, there's one more. We did not include this in our report. However, it's an issue that frequently comes up to me around the world. The implementation of, I call it IFRS 9 in the United States, you call it CECL, the expected credit loss, and that standard that was changed post-financial crisis to make you do the expected loss calculations, and it costs credit unions a lot of money to do the work that needs to go in around that. You pay accountants a lot of money to it, and ultimately end up setting aside a lot more capital that you could otherwise use for your members. We have been working with the IFRS to allow more flexibility to use what we call the IFRS for SME standard, which it's used by the United Kingdom right now. And it would essentially allow you to go back to the incurred loss methodology, how a lot of people are doing it pre-CECL IFRS 9. To do that, I'm anticipating in about another year or so. They put out a proposal for consideration, which we commented on. They were hesitant to do that in the beginning, but agreed to do it. I'm hoping that language comes out with some more flexibility to give you some relief in that area. Just keep an eye on that, because I know that's a big regulatory burden, and the implementation of it has been difficult for, I don't know a country that hasn't had some kind of issue with that at this point in time. So that's just the last issue I would cover. Didn't really cover in the regulatory guide, but it's an issue we're continuing to work on.
Erin, anything you want to add?
Yeah, we couldn't let folks off without that last technical, reference in there with the IFRS 9, right? Well, and I know we have a couple of slides. Greg, I don't know if you want to throw the slides up before we do questions or after, but
Sure, let's do that. Let's do that before.
okay.
Yeah.
Yeah, if we could pull up those couple of slides. I know, as Greg mentioned, we covered a lot of ground. And so, I never want to leave folks, kind of feeling like a whirlwind, what just happened there. And so want to highlight a couple of the key resources that we mentioned here. And so as you're thinking about, okay, we spent this hour kind of talking together on regulations, what am I walking away kind of with? What should I be taking back to the credit union? There's, a couple of key resources we pointed out here today. I hope folks really to think about, especially that top one, that climate change discussion, taking back, even if regulations aren't your kind of primary source of work or the hat you wear within the credit union, but thinking about, is there a network we can join? Is there a group, a collaborative group with other credit unions that we can convene with? And is there something we can do today to document our current activity? I hope folks walk away kind of thinking through some of those practical applications kind of to start with. So a couple of just resource guides there. And then if we want to flip to the second slide here, I know that folks may not be aware of all the different resources that are available to them as part of their membership with the World Council, and just wanted to highlight those that are particular to advocacy and to regulations. And so if you haven't checked out our blog, or if you're not receiving our monthly telegraph that kind of combines a lot of those recent developments at the international standard setting level, if you want to know what's out for comment, what comment letters we've submitted on behalf of credit unions globally, please do check out that webpage to see kind of to stay up to date on what's going on there. And of course, wanted to make sure everyone had our contact information. We are a couple of compliance regulatory nerds over here, as we were saying at the beginning, and just
You can't tell at all.
we just love talking about all of this all of the time. And so, especially as folks are starting to work on advocacy initiatives, at their national level. I know we've had folks reach out to say, hey, what's going on globally in this area? We're working on trying to get proportionality kind of in our home country. What are others doing? Or, we're proposing this letter to our regulators. Can you take a quick look? So, want to make sure everyone had our contact information there, as well as we kind of continue this work at the international level to make sure you've got enough resources to do this at the national level. So yeah, thanks for hanging in there with us. I know regulations aren't everyone's favorite, but super important regardless of how you feel about them.
Well, I think you guys both have so much passion for what you do. It comes across very well. I do want to get some of the questions because we do have some from folks before we sign off today. So the first one came from Jose in Bolivia. He said, in Bolivia, we are governed by two laws, the general law of cooperatives and the law of financial services. There are also two supervisory authorities, the supervisory authority for cooperatives and the supervisory authority for financial services. In the inspection processes, they often apply aspects that are not their responsibility. Are there similar cases to this, and how is it applied?
Yeah, that's very common. I see that in a lot of places where you sometimes have competing regulators overseeing an industry. I personally don't like it. I mean, credit unions tend to be, as a percentage of assets compared to banks, much smaller. Why are you wasting government resources having two regulators when one could do it quite well and provide consistency to your industry? That would be how. Having said that, though, getting governments to change that is the whole ball of wax. I mean, that's where all the work comes to do that. There are a lot of examples where you have multiple regulators. The United States, you have a prudential regulator, and you have all the consumer protection laws being handled by an entirely another agencies, and they'll tell you they've got 10 agencies that are regulating certain aspects of what they do. In the EU, you have the European Union level, and then you have the national level regulations. I see a lot of countries around the world where the registration is handled by one agency, and then the prudential is handled by another, and the registration people often don't talk to the prudential regulators, which is, to me, a disaster in the making. And so a lot of times you have to go to the regulator and say, hey, you need to come together and work on this in a way that makes sense for your industry. So it's a common problem. I see it all over the world. Getting those streamlined and doing the advocacy at the local level is really key to getting a system that functions, that promotes safety and soundness, that gets away out of the way of ticky-tack regulatory issues that you don't need to be bothered with. It's actually key to having a prosperous credit union system.
Yeah, and as Andy said too, there are examples of folks, in that fight too, currently trying to work through that dynamic, but also ones that are taking steps, if it is creating issues, advocacy steps to try and address some of those too. So there are efforts going on, and oftentimes pointing to other systems, either in a neighboring country or regionally or even globally, has been effective. So that may be another approach too. And if other examples are needed, certainly feel free to reach out, because I think that is kind of a dynamic that a lot of folks either have been grappling with or are grappling with now, that can be addressed.
Really interesting question here from Luis, who says, everyone talks about climate change, but the cost of this transition is very high for developing countries and their financial entities, even though they're much more advanced with respect to clean energy a lot of times than developed economies. Speaking of proportionality, I have the impression we talk a lot about it, and the time invested and the cost required is much more relevant for cooperatives in small countries with less economic power. So how could we undertake this task in a more balanced way so that the process is less onerous for cooperatives in these small countries?
Yeah, the underlying thrust of your question and the impact of regulatory burden on a credit union is something that concerns me very much. I mean, the ability to start a credit union now, the amount of money that you have just to get the baseline of regulatory requirements from anti-money laundering is staggering. It's often in a lot of places preventing new credit unions from entering the market. It is the question that you asked, it hits on the challenge that we have, wanting frameworks that really encourage safety and soundness, but also get way of the credit union cooperative model to serve smaller communities. The tool that we have in our tool belt, though, is the proportionality that's built into the international frameworks. And the really hard part we have is articulating at the national level, what does that mean? What does that look like? And so we do a lot of work in that area saying, look, here are areas where you can tailor down some of these regulations, support the credit union cooperative model, and make it work. And what WOCU can do to that is bring you our experience from other countries. Ideally, we can do it in something regional to you. People in countries like to see what's been done regionally, but examples from around the world that show ways that these have been done successfully for credit unions, but also then pointing out what is actually in the international standard setters as well. It is hard work to do, and getting that balance that you alluded to. I am deeply concerned about the cost of the sustainable reporting that is likely to be imposed on us here early on, without them taking the next step of these rules designed for the large, really publicly traded corporations now being applied to credit unions. I think it's going to take a while for us to work through that. Coming up with methodologies that credit unions can take to regulators and propose is a lot of the work that we do and are working on. But it's a great question, though, and I agree with the thrust of how you asked it.
A question here from Juan, who says, I'm a tech guy moving into the banking fintech industry. I'm very interested to create a group to analyze the impact of AI and CBDC. I don't know what that is, but perhaps you do, into the credit
central bank digital currencies. Yeah.
Got it. There you go. Central bank digital currencies into credit unions. Now we're in the middle of a war between Google and GPT. So I think this is a good time to create solutions within the industry and make a great profit for credit unions. Are you exploring AI or CBDC in credit unions?
Yeah, AI is confusing for all of us, particularly us not in the IT world. It is a big challenge for regulators now who are in the process of trying to understand it. What you see coming out of the international standards is a couple things. Number one, they're very much supportive of technological informations and allowing places for that to happen. And you see sandboxes and stuff that they're working on, not only fintech, regtech, suptech, all of these kind of AI is a clear focus of theirs, trying to understand it. They're trying to understand. You have this algorithm that learns and changes, and so the issue of, well, how does a credit union understand the risk that they're putting onto their balance sheet and understanding what is that algorithm doing? They're looking at a lot of issues concerning, is using this algorithm perhaps having unintended consequences, having discriminatory effects among your lending process and your decisioning making. We've seen guidance come out at the national level, also at the international standard setting level. The international standard setting is more saying, we're looking at this, we're concerned, we like it in some aspects, we're trying to figure out how to put a regulatory framework around it. I mean, what I can tell you is it's an emerging issue that everybody's trying to grapple with and come to terms with. Do I think it's going to have a role in financial services in the future? Absolutely, 100%. It is clearly coming. It's going to be used. It's being used now in circumstances. The regulatory framework has not caught up to it. That's what I can tell you from my perspective, although it is being looked at quite seriously.
All right, Erin, if you have nothing else to add, we will move on. Those are all the questions that we have. I want to thank everybody for those were great questions, by the way.
Yeah.
And I just want to mention that if you liked this virtual event, you want to watch it again, or you want other folks in the compliance industry in credit unions that maybe didn't get a chance to join us today to see it, you can refer them to the World Counsel YouTube channel. That is at youtube.com/WOCCU/WOCU. It's going to be available there later today. And if you want to participate in more in-person discussions with Andy and Erin, they'll be hosting several of them at the 2024 World Credit Union Conference. It's going to be held in Boston in the USA this year from July 21st to the 24th. Early bird pricing for registration is still available at wcuc.org. So if you haven't gone to register yet and you want to join us in Boston, do it while you can save some money. That's it for us. Thanks for joining us, everybody. Have a great day.